So people will say, well, gee whiz, what do we do? Well, the first thing is to do what you do best. I'm a financial planner. That's what I do best. That's where I focus my efforts. And each of you, you've been blessed with a skill set. And I would ask you to perfect that skill set and become the very best at it. And then number two is banking. Now, it is not banking in the traditional way, meaning you're going to try to establish an institution in where people make deposits. I'm talking about using the banking philosophy to create wealth for yourself, just like the banks do. And so let's take a few minutes here to discuss how that's done. The first place that you need to consider placing the money to establish what we call a bank is in a vehicle that the IRS calls IRC Section 7702. I love that technical term, but at the end of the day, it is a dividend-paying whole life insurance policy. And it's very important to understand the benefits of funding this vehicle so that you can create the banking strategy that we're going to talk about. So don't lose sight of the fact that, hey, I've been told that I should invest in equity vehicles because I need the growth. I'm going to show you that growth, rate of return, is not as powerful as liquidity, use, and control of your money. So Mark, if we could just go to the next slide, we can talk a little bit about that. One of the things that people who have built tremendous wealth, and I will show you that the wealthy are truly using this vehicle. This is not a vehicle that, you know, the top 3% of the country is avoiding. This is a vehicle that they are using and using to a great extent. And one of the reasons is there's unlimited contributions. Of course, when they say max out your 401k, the reason that word is used is because you cannot invest more than the legal limit allowed by law. Of course, we all want the tax-deferred growth. Now, these are features that are available in this dividend-paying whole life insurance policy. Of course, we want the tax-deferred growth. And then guarantees. Now, this is the flashback to Warren Buffett not losing money. This is the flashback to the leader of the free world, Susie Orman. They all want guarantees, and so should you. The next bullet is that liquidity, use, and control. And again, we will explain exactly what that means, but I want you to really focus. I mean, if you've got pencil and paper, write that down. Liquidity, use, and control. The next one should be very exciting, and that's tax-free access to your money forever if done properly. Now, there are people out there that may say that they have a policy such as this, or that someone tells them that they can set up a policy for them, but trust me, there are very few advisors that understand how to strategically design a policy that will meet the needs of the average investor. This next one, the 59 and a half, you know, you can't access your money until you're 59 and a half without penalty. And for some of you younger folks on the call tonight, if you didn't know, you know now that once you reach 70 and a half, if you have not started distributions from your IRA, your 401k, the government will tell you what the minimum amount is that you must take out of that IRA every year. For us and for the wealthy, you want no IRS involvement. You definitely do not want probate. That's when you pass away and your assets find themselves in court, and the court determines who and how your assets will be distributed to. And then finally, the companies that we work with have over 100 years of history and reliability, and that's very important in today's environment.